having a founder that was anonymous or pseudonymous is important. I think the founder disappearing is also important. I think that the fact that the Satoshi coins never moved is also important.
Hello and welcome to Wealthy Value. In today's video, Bitcoin bull and CEO of MicroStrategy, Michael Saylor updates on Bitcoin's price action and associated volatility, its role during wartime, Bitcoin as a perfect asset for retirement plan, and what is it going to take for the government to better understand Bitcoin. Make sure to stick around till the end of this video where Michael Saylor makes an updated price prediction for Bitcoin and also reveals whether he is Satoshi or not. If you like the video, don't forget to give it a thumbs up, subscribe to the channel, and turn on the post notifications. Let's dive right into the video.
Well, look, Bitcoin's digital property, and that makes it the perfect asset for a retirement plan. It's less risky than bonds, than stocks, than commercial real estate, than gold. It was kind of built for this. Most people buying Bitcoin, they want to give it to their grandchildren and their great-grandchildren. So I think Fidelity's put their finger on an issue. There's 80 million Americans that currently own or have owned digital assets. 30% of institutions want to own these digital assets. 401k plan is a pretty common thing for millions and millions of workers to use to save in order to protect their family interest. And this is going to fill an important vacuum in the investment product market. There's three types of investors in Bitcoin. There's the traders, there's the technocrats, and there's the maximalists. The maximalists are buying the stuff to give to their grandchildren, and they just dollar cost average in, and they're all in already. So they don't control the market. The technocrats think it's the next big tech network like Google or Facebook. When they're feeling bullish on technology, they're buying. When they're feeling bearish on technology, they're selling. The traders think it's either a correlated asset or an uncorrelated asset, the risk assets, depending on their mood. Right now, they think it's correlated to risk, and so if they're selling risk, they're selling Bitcoin. It's obviously not a tech stock. It is actually the ultimate risk-off asset. In time, over the course of 4, 5, 6, 7 years, everybody figures it out. But right now, the traders and the technocrats control the market trading of Bitcoin, and it's a function of the tug-of-war between them and the mood in the market.
Are you Satoshi Nakamoto?
I'm certain I'm not. Having a founder that was anonymous or pseudonymous is important. I think the founder disappearing is also important. I think that the fact that the Satoshi coins never moved is also important. I think the lack of an initial coin offering is also important. I think the lack of a corporate sponsor is important. I think the fact that it traded for 15 months with no commercial value was also important. If there was a Satoshi sitting on top of $50 billion worth of Bitcoin, I don't think it would cripple Bitcoin as property, but I think it would undermine. I think the risk has never been lower. If you look at all the risks, right? The risks in the early years is the engineering protocol proper? Like 1 megabyte block size, 10-minute clock frequency, cryptography is first, will it be hacked or will it crash? So the risk has been bleeding off over time as the network monetized. I think the second question is, will it be banned? You couldn't know. It literally could have been banned at any time, many times early on. In fact, in 2013, I tweeted on the subject. I thought it would be banned. Now we're sitting at a point where all those risks are out of the way. I would say that year one of institutional adoption is it started August 2020. That's when MicroStrategy bought $250 million worth of Bitcoin, and we put that out on the wire. We were the first publicly traded company to actually buy Bitcoin. I don't think you could have found a $5 million purchase from a public company before we did that. And then in the next 12 months, Tesla bought Bitcoin, Square bought Bitcoin. And I'd say now we're in year 2 of institutional adoption. And there are about 24, should be 24 publicly traded Bitcoin miners by the end of this quarter. So you're looking at 36 publicly traded companies. You can't loan the gold. No one's going to create a business with your gold. So gold doesn't generate much of a yield. So for that reason, most people wouldn't store $1 billion for a decade in gold. They would buy $1 billion of commercial real estate, property. And the reason why is because I can rent it and generate a yield on it that's in excess of the maintenance cost. So if you consider digital property, that's $100 to $200 trillion addressable market. So I would think it goes from 10 trillion to 100 trillion as people start to think of it as digital property. Digital property isn't the highest form, right? Gold was that low frequency money. Property is a mid-frequency money, but when I start to program it faster, it starts to look like digital energy. Then it doesn't just replace property. Then you're starting to replace bonds, 50 to 100 trillion in other currency derivatives. And these are all conventional use cases, right? I think that there's 350 trillion to $500 trillion worth of currency derivatives in the world. Mm-hmm. And when I say that, I mean things that are valued based upon fiat cash flows. Any commercial real estate, any bond, any sovereign debt, any currency itself, any derivatives to those things, they're all derivatives and they're all defective. Bitcoin's a universal trust protocol, right? A universal energy protocol, if you will. What I see is a bunch of fragmentation of applications. For example, the Russian payment app is not going to work in Ukraine.
Right. The
Ukraine payment app is not going to work in Russia. The U.S. payment apps won't work either of those places, as far as I know. So, and in Argentina, their payment app may not work in certain parts of Africa. So what you have is different local economies where people spin up their own applications compliant with their own local laws, or, in war zones not compliant, but just spinning up. The entire crypto economy is very embryonic, and the human race's adoption of it is embryonic. We're like 1-2% down that adoption curve. If you take Lightning, for example, the first real commercial applications of Lightning are just in the last 12 months.
Yeah.
So we're like year one. We might be approaching year 2 of commercial Lightning adoption. And if you look at Lightning adoption, Lightning's not built into Coinbase, is not built into Binance, is not built into FTX. Cash App just implemented the first implementation, but not all the features are built into it. There's a dozen Lightning wallets circulating out there. So I think that, we're probably going to be 36 months of software development at the point that every Android phone and every iPhone has a Bitcoin wallet or a crypto wallet in it of sorts.
Michael Saylor believes Bitcoin is the perfect asset for retirement. He noted that Fidelity's new Bitcoin 401k solution will help fill an important vacuum. Saylor pointed out that Bitcoin is a much better investment choice than popular traditional asset classes, including gold, stocks, and bonds. According to the MicroStrategy chief, the leading cryptocurrency is less risky and much safer than traditional assets, making it the perfect option for retirement. So what are your thoughts about Bitcoin as an option for retirement plan? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.